All right, so coming up next on the Short Vol Show Live, important information about UVXY and why the whole term structure has been turned on its head, and why you need to be really careful here about your assessment of the VIX versus UVXY, because the VIX and UVXY are operating very differently than they normally do, and they're not one and the same at all. So let's talk about that and more coming up next on the Short Vol Show Live. In the meantime, here's one of my new commercials that I've been working on. Check this out.
Thank you for watching the Short Vol Show Live. Thank you for watching the Short Vol Show Live.
All right, so we're still kind of working on some of these commercials here, but anyway, thanks for watching. Welcome, and a really exciting day yesterday, I know, for everybody with the market rallying 1,000 points, and it ended up working out great for me because I turned my whole 401k from cash into stocks yesterday morning, and so that was great. But you know, I've been it's basically making back some money that I lost earlier in the month. So, but enough about me. Let's talk about UVXY, the term structure, and what's going on now. And for that, I'm going to pull up the term structure on VIX Central. Okay, so the spot price of the VIX right now is 32.26. So this chart is pretty close to being accurate. And there's some big issues here. One issue, as you can plainly see, is that spot is almost $7 higher than the futures right now. And I don't know, I was watching something on CNBC where they were saying, oh, well, the futures just don't believe spot. And that is sort of accurate. But what's important for us to realize trading UVXY is that there is an incredible amount of pressure on these futures to move higher. Every minute that the VIX spot does not crash lower, there is pressure for the futures to move higher. So you have to be incredibly aware of that. Now, when we look at contango, if you look at this box on the bottom left, it says contango 9.22%. Okay, that is also pressure. Every day, the rebalance is selling one of the Jan futures and buying one of the Feb futures, and that is creating more pressure to the upside. If we were to say, if this was 10%, which has been bouncing around 10%, if we were to say it was 10%, 10% of 90, just to use round numbers here, is $9. So everything remaining the same, UVXY goes up $9 per month at this point, plus more pressure on the upside. So this is like the opposite of the reason why people short volatility. People usually short volatility when we're in contango because there's pressure to the downside. And if we were in 9% contango, people would be really saying, wow, this is a great time to short UVXY. Well, guess what? We're in backwardation by 9%, so it's a good time to be long UVXY because there's an incredible amount of pressure to the upside. The only caveat there is that 32 volatility, where we are right now, is abnormally high for volatility. So you've got this tremendous pressure pulling the futures up towards spot, and then you've also got the ability of this to crash lower pretty quickly with the spot heading down towards the future. So they're obviously going to meet somewhere in the middle. And to figure out kind of some clues as to what's going to happen as far as the spot, let's take a look at the historical chart for the VIX. All right, so this is the VIX over the last year, and I am sufficiently out of the way here, it looks like, which is good for a change. And we see this most recent spike that's right by my head there, topping out at about 36 for the VIX and then coming a little bit lower. Now, the VIX obviously is a derivative of a strip of options in the SPX, so it can certainly be helpful to look at the SPX as well to get a gauge on what is going on here. And we know, as a proxy, we'll use the E-minis, and we see here that we had several straight down days. Actually, it was basically 2 major straight down days ending on Christmas Eve. And that was what caused the VIX to spike up to 36 and change. And then we had that big kind of relief rally yesterday. And a lot of people were tweeting out that this is bear market activity and that we'll probably get that big violent up move and then we'll sort of grind lower. Now, this whole process of the last couple of weeks has kind of been in sort of a slow motion type thing. I mean, yeah, if you look at the day's activity, these things have gone straight down. But over minute to minute, it's been kind of slow motion. And several people who've been through a lot of these sort of crash type scenarios before have been commenting on how, well, the VIX didn't really spike. It kind of like slowly moved up. And they would have expected to get a higher VIX with this move. They would have expected like it in the 40s or something like that. And it's been sort of a slow motion type situation. But it is what it is, and we got up to 36. And I have a feeling that that is the highest place that the VIX will go to in this current situation. However, whereas the VIX may have topped out here, and like I said, I feel pretty confident the VIX has topped out here for this situation. But whereas the VIX has topped out here, and here you see the high 36.2, UVXY may not have topped out here. And you see UVXY, you see the VIX giving back here, right? But UVXY right around the highs. Now, that is due, once again, to this pressure on the futures to move higher. You know, if the futures were totally following the VIX, and then they would be up to 32, and UVXY would be far over 100 right now. However, the futures are like discounted and are way lower than the VIX. But the more days the VIX stays up here, the more pressure there will be on all of these futures to come up and meet the VIX. Of course, the front month future has to come up and meet the VIX price on expiration, but expiration is far off right now. However, there's continuing pressure. Usually, we would say a big spread between the VIX and the front month future would be like $3. And right now, there's a $7 spread, a little bit less than a $7 spread between the front month future and the VIX. So there's pressure on every minute that the VIX stays at this elevated place. There's pressure on all these futures to pull up towards the VIX, and that translates into UVXY moving higher. Remember, UVXY is based on these two, a blend of these two futures, the F19 and the G19. I think. Wait, let me make sure that that's Jan and Feb. Jan and Feb for sure. I'm not sure if I have the right futures highlighted there. So you need to be very careful when you're making an assessment of like, well, is UVXY topped out? Because although I feel pretty confident that the VIX is topped out, I'm not entirely confident that UVXY is topped out. So we want to be extra careful about that. It appears at this time that that oil may have found a bottom for a little bit. I did invest in XOP yesterday, and you can see the chart here for XOP coming off the lows. Let's take a look just at barchart.com here for a second. And you can see, okay, just to verify which future is which here. So when I look on here, I can see that VF19 is Jan 19. And then Feb 19 is G19. So I did have that correct. The UVXY is based on these two futures, F19 and G19. If we want to figure out how much of each one of these futures, we can go to the ProShares website, UVXY ProShares. And that will tell us how much of each one of these futures is represented in UVXY right now. And remember, every day we're selling some Jan futures and buying Feb, and expiration was last week. So it's mostly Jan right now, slowly rolling out to Feb. So I'm going to pull up right here the ProShares website if it ever comes up. ProShares. Here we go. And we can look at the daily holdings for UVXY. And, you know, if you have to go off to watch the open, and you can watch this video once it's released in a few minutes, it will come up on my YouTube channel. Okay, so we're seeing the front month futures, 60. It has about 7,000 of them versus 2,600 of the Feb futures. So we're heavy on Jan. So whatever's Jan is doing is what we're doing. And you know, this could easily. There's no reason why with the VIX at 32 that this Jan future couldn't go from 25.9 to 27.9. There's no reason at all. It's just a question of supply and demand. And so UVXY could clearly jump to like 95 or something. And so be aware all the time when you've got such a huge spread between the spot and the front month future, there is tremendous pressure for these futures to move higher. Now, futures guys, you know, obviously they don't want to pay up to like 28, 29, and then we rally and the VIX crashes back down. Remember, yesterday the VIX was down, I think, like 6 points at one point. So it can move around, and people expect the VIX to move lower because it generally averages somewhere around less than this. Some people would say 26, some would say 20. You know, most of last year, the VIX was below 12. So this is a really high spot for it, and it is destined to move lower. One thing's for sure, to get the VIX to spike from 32 upwards would take a huge down move at this point because we're already at such an elevated point. So all that being said, the question is, what do you do? And as far as trading UVXY, and the answer is you be nimble, and pretty much there is money to be made on each side of this trade. What do I mean by that? I mean, we're kind of high in the range right now, 89.66. So if you were to short it here, you probably will get a chance to buy it lower. If you know, if this rolls down a little bit to maybe 85, and you were to buy a little, you probably will get a chance to sell it out a little bit higher. There's money to be made on each side of the trade. The thing is, don't get stubborn. And, you know, if you put a trade on and it starts to be a winner for you, I would recommend taking it off. The other trade, which is sorry about that pop. The other trade, which is of interest to me, is once again, and I know I'm still harping on this, but the long-term short from here, UVXY 90. If we roll out a couple months to, let's say, to June, you know, we definitely are going to be lower 6 months from now. It's just the way these things work. This is a tremendous spike. It's a very rare occasion, and we will be lower 6 months from now, no matter what. So, you know, there's a question of how much lower, but if you were to put on some sort of out of the money put spread in June, you're not going to get hurt that much for, you know, in future spikes to the upside. And it will roll down there at some point, maybe something like the June. And if I was going to put some long-term trade like this on, I would want to get paid a lot for it because my money is locked up for a while. So I would pick something at, you know, at least as low as like the 50 strike. So maybe June 50, 40 put vertical. So you could buy the 50, 40 put vertical for about a third the distance between the strikes. And thus be able to buy this for like $3 and sell it, and you know, have it end up being worth the distance between the strikes, which is 10. So that's a good trade. It locks up capital for a little while, but you can basically put this trade on and stop looking at this for some time and just let it ride and not have to worry about the day-to-day in and outs of what's going on here. If you are focused on the day-to-day in and outs and you are looking to try to like take a little more risk and try to make money more quickly, you could consider something a little bit closer to at the money. Now, you know, I've gotten heckled a lot online about, you know, saying, oh, you always want to be short. That's the only dynamic you have. You know, you're a one-dimensional trader and all you want to do is short UVXY. And that is not true at all. What is true is that I have gotten burnt on the way up here, and so the last thing I personally want to do is to cover at the top and watch it go all the way right back down again without me being a little bit short. So now that's just a personal thing for me. So I do have a bit of a short position on right now. What I have on is a condor, but we are on the upper side of the condor. So basically, the way it's set up is I have the UVXY 18 Jan, which is 22 days away. I have the 66, 69, 81, 83 condor on. So essentially, if UVXY is between 69 and 81 in 22 days, then I get the maximum return. Initially, I had just bought the 81, 83 put spread for around $1. So essentially, if it's 81 or below, I would double my money. But then I sold the put spread down below to turn it into a condor to actually collect more money. And so that is what it is. I feel comfortable that I have a good shot that this will be below 81 in 22 days. And that's the trade I have on. Now, if it goes really way lower, below 69, then that wouldn't be optimal for me. But so I'm making an educated guess that UVXY will be between 69 and 81 in 22 days. But as I've said before, this can very easily drift higher from here in the near term, as there is pressure on these futures to move up against it. People are trying to make sense of the rally yesterday, and that is fairly typical of like markets going down as you get this huge relief rally, and people think, oh, it's all over, and we won't know until sometime in the future if it was all over based on that. But as we see today, there's a continued grind lower, and as I've said several times before, until the trend is broken here, we are on a downtrend, and we continue to be on a downtrend. If we look at the E-minis here over the last few days, if we go to maybe a 20-day, we can see we're still on a downtrend here. And we had a little pop back yesterday, but it remains to be seen if we're really going to break this downtrend here. And I will leave it to other technical and chart analyzer type guys as to what point it is that this has turned around and gone back up. But safe to say, just looking at this, we're still in a downtrend. The more we back the charts up, the more almost pessimistic it looks. Here, this is really backing the charts out to 3 years. And we can see that this thing might have farther to fall. It could fall to 2,000 or something. And, nothing is really out of the picture at this point. It seems we're paying the price finally for years of cheap money and of QE and the government propping up the markets. And, now comes the hangover. And so this could definitely go lower. Now, the market's going lower does not necessarily mean that volatility is going to go higher than this. As I said before, my experience in 2000 to 2002 was that once the internet bubble popped and markets sold off, like everyone's like, what's going to happen now? Well, basically nothing happened. There was no paper. Markets just stayed down, and the volatility actually came in. It's like basically just all the musical chairs just stopped, and nobody really cared about the stock market, and volume went down. Volatility came in, and everything just calmed down. It was like a ghost town in the pits. Like you go around the pits, and you didn't hear brokers yelling out orders because all the customer paper just dried up. Nobody wanted to play the stock market. They're like, oh, the stock market's awful. We don't want to play. And so, what can happen here is that we kind of just stop. We sit at some area down lower here. We stop seeing those like 2% intraday moves, and basically there's just nothing going on, and it just sits, and volatility comes in. So it's not once we get into this like down move and it's really established and we're just grinding lower, volatility can definitely come in. And I don't see us staying at 32 in the VIX for very long. Now the big question remains: do the futures rush up to meet the VIX, or does the VIX cruise down to meet the futures? And obviously it's going to be a mix of both, but whichever one is the stronger impulse will direct which way UVXY goes from here. But with both of those forces counteracting each other and canceling each other out, there is a strong chance that UVXY kind of just stays in a certain area elevated for some time moving forward. I don't know if that's good or bad news for you, but that's what I see happening here. I see us just trading in a higher range, and I see the VIX staying in a higher range for a little while at least. I do believe that the VIX will come in some from here. I think that we've reached the height of this particular spike in the VIX, unless there's some huge news story that blows it away. But in general, I think that we've had that big move down, and now we get succeedingly smaller moves up and down, and volatility will come in. But volatility has to come in pretty quick to counteract the force of these futures being pulled upward. So we could see UVXY, pop to 100 without the VIX moving any higher, just due to the fact that there's this huge spread between the VIX and the futures. So I said that several times in a row to try to get it through, and I hope you're hearing me there. In the meantime, there are bargains to be hunted for. There, when we get these big down moves, there is money to be made in these stocks. Once again, some of the options are mispriced. They're priced too cheaply here, and also when we get these big down moves, you can buy a stock, and then when we get a pop like yesterday, you can sell it back out. But the key there is that you do sell it back out after the pop so that you can reload for later, because you don't want to get just caught on this grind down type thing. The thing that I lost the most money on in 2000 to 2002 was getting long far out options, looking to own some options so that I could make money on these moves, and then volatility kind of just died at some point. So don't think that the market being down means volatility can't come in and it just kind of dies, because that's kind of what happened to me. Now, it was a kind of unique situation because I was a market maker in several illiquid issues, and when people sold me stuff, I had no way of getting out of it. So I just kind of caught holding the bag, which is not something that will happen to you as a retail trader in these liquid issues. But it is still something to think about, that once again being that even with the markets down, that volatility can kind of just die right here. So I wouldn't take too much of a stand. I'm not telling you at all not to try to scoop UVXY if it goes down a little bit and try to sell it out a bit higher, but I wouldn't take any big stands on volatility, because we are at a historic high right here in volatility regardless of anything else. And even though the VIX futures are lower and need to connect with the VIX at some point, VIX will not stay at 32 for very long. Anyway, I hope you've had a good holiday, and figure out a way to make some money in this market, because there are opportunities out here for sure, and I hope you can find them. Please feel free to contact me, and thanks for watching. And I'm going to leave you for the market open here. We're 4 minutes away from the open. Good luck trading today, and I will see you in the next one.